Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Monday, May 2nd. It is 6 a.m. straight up as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures. Bitcoin up 1.5%. Oil down 3%. Equities mostly flat to slightly green, up about 4 or 5 tenths. Gold down 1.5%. Copper's down sharply 2.5%. Over on macro, we've got PMI and ISM manufacturing this morning, along with construction spending. Over in earnings, the names that I'll be most interested in happen to be occurring after the bell. Devon Energy, Mosaic, and Nutrien in the fertilizer complex. Expedia and MGM in the travel and leisure segment. And Chegg also after the bell today. So, just as a reminder, I did a weekend profit navigator yesterday afternoon, pretty comprehensive, went over currencies, went over the indicators, the indexes, and all the SPDR sectors. If you want to read in on that, you can find that on the YouTube channel, tradersprofitcompass.com, and listen to that if you care to. So I'm going to go rather quickly here today as we go over the indicators really quickly, the indexes, and then see where we're at on the FATMAAN names. Now, I was kind of surprised last night. Futures traded in a pretty narrow range all night, not a lot of volatility, and come to find out that there are or were a lot of Asian markets closed last night. Maybe part of the reason why the overnight session was rather subdued. So we'll just have to see how today pans out. Remember, we've got the FOMC rate decision at 2 o'clock on Wednesday afternoon. So really all eyes are going to be fixated on that event coming up on Wednesday. As we discussed over the weekend, our McClellan oscillator here for NASDAQ is only down at negative 0.42. What I'm hoping for, doesn't mean that I'll get it, what I'm hoping for is a sharp move lower into minus 60, into this band of minus 60 to minus 90 that would give us a really confident look on scaling out of our shorts and getting positioned for an oversold bounce. Here at minus 42, yeah, the rubber band is slightly stretched to the downside, but certainly not at extremes. And we had mentioned yesterday that we were all the way down at almost minus 90 at the February lows, and we have not been that oversold since. I would like to get something below minus 60 to be able to scale out of shorts. Like I said, we've seen these moves higher from here. Just, this was, we had a bounce. This was the head fake bounce on, what was that, Thursday. We had that 3% up day, and then they reversed it the very next day and brought it down on Friday. So I'm still leaning to the downside near term, even though sentiment is blown out bearish, and some of the other indicators, the more indicators you look at, the more conflicting evidence you'll get at. You'll have. Some will say it's time for a bounce. Some will say there's more to go. You're just going to have to lean on the ones that you feel most confident in. And for me, it's the NIMO and NAMO oscillators. But keep in mind, depending on how finely you trade things, how nimble you are, that we could certainly get a 3% bounce today. And when you've got the VIX up at 37, that's just a day at the office, right? When you get a up or down move like that, when volatility is this high, it's par for the course. So room to the downside on NASDAQ oscillator. Same thing on the New York oscillator here at minus 45. You see the zones that we've been working with forever. I'd like to see something down here to kind of confirm that we could confidently exit our shorts. Here's the VIX daily that I was talking about. We're up here at 34. We see that in recent memory, we've been above 36, 37 a few times. If you go back to the COVID meltdown, we were up in the, I think we even got to 80 or something like that, but I don't expect that. But this looks a lot to me like a bull flag, an impulsive move up, oscillating, consolidating in this flag. And, if we were to get a push above 36, combined with a, obviously if we got a move above 36 and the commensurate move down, we could infer that those NIMO and NAMO rubber band readings are going to be stretched to the downside, and that would be a clue to start taking some off the table on your shorts. So do as I recommend. Keep VIX prominent on your screens, whether that's on a sideboard watch list or actually devote a panel to it within your trading matrix. Keep an eye on that. Trend means everything. Is it trending higher? Is it trending lower? That'll give you a lot of confidence whether, especially if you're active trading, do you want to be on the long side or the short side of whatever you're trading with the VIX trending higher or lower? That's going to have a big bearing on things. We talked about the volatility term inversion is flashing extreme fear. So that would be an indicator that says, we're due for a bounce. Moving on to SPY. Here's our daily chart. We've talked about testing these. We've already gone below the March lows. Now the last stop at the station is the February low right down at 410. You'll remember that's an important level on the weekly chart as well. So there's a lot riding on the line here at 410. I think that's your clear pivot point for today, where a near-term bounce is possible, but also quite possible that we break below that for a stop clearing panic move heading into the Fed. And so we'll just have to see if they hold the line here over the next couple days, or they bounce it, take it down. I hate to be wishy-washy, but I just go by levels. I don't I'm not in real big on making super big predictions. My bias is lower short term, just because of the setup here, but certainly open to bounces. Longer term, I think we're definitely going lower. Here it is on the, I had to back out to the 2-hour chart just to show you kind of where we're at. Here's the classic A, B, C measured move that we've talked about. You can see that here we made a lower low. Now you got to go back in the chart. You'll find that 411 was the February low. So we're right here right now testing that level. If we go on to the Qs, little different picture. Why? Because we've already broken below the March and February lows. So we're carving out new ground to the downside, and really for the bulls to start asserting themselves, they've got to take price back up above what was once support, this zone between 317.35 and 322. They've got to take that out. Otherwise, all this is just going to be resistance. So any kind of little, back test into 317, 318, this zone here is going to be just that, a back test, because there's going to be quite a bit of supply overhead just waiting for them. And, once you're below a prior low, you've got to recapture that low before you can be bullish in any respect, honestly. Here I've dropped in a downtrend line off of all these lows. You can see now that we're down below, just as we just talked about. What I've done is drop in this open gap that we have from 305 down to 298. I think that's going to be a magnet at some point that's going to get filled, whether it's on this cycle or we have, a little down move and then an up move and then come down and fill it. But, gaps get filled, and given this environment, I think we're going to go down to that 300 level, get this gap filled, and then we can kind of take it from there. IWM, bearish all the way. Why? We are down now below this $20 trading range. My base case now is coming down at some point to that 165, 170 level, which is the measured move target. What would give me pause or, put that narrative on hold is a move back into the range, back above 187.50. We're trading now at let's call it 185. So it's not outside the realm of possibility to get a kickback here to 190, 191, something like that. Get everybody bullish, then come down. But as long as we're down below this trading range, then you more or less have to be bearish. Here's a 60-minute chart. Not a lot of value add here. You can just see that we broke that level. Now we're testing the prior lows of just the other day. But if you recall on the weekly chart, that 187.50, 188 level corresponds to a huge level on the weekly chart. And we had a weekly close below that level last week, so the door is open for a move back down to 170 as we discussed. Facebook outperformed the market on Friday. It was down 2.5%. NASDAQ was down 4.5%, so it kind of held its own. I would use right in here, I would use 200 as your pivot. We've got a downtrend line that obviously price has run up against. If you get a break above, you can be long. Just realize that the 50 EMA is looming above as resistance. You can see back here, just a couple weeks ago, the 50 was the place that rejected price, and then it went down. Also keep in mind, you've got this gap at 192 to 175. That's almost $20. So that is something certainly you want to participate in to the downside if you get that gap entry. And maybe something to do here while the oscillators are in the posture that they are. Maybe you just let Facebook go for a while, set your alarm at 192 and be ready for that break. Just kind of like take it easy. And if you get an oversold reading, then that would be possibly a time where you could take a long on a breakout. But right here, right now, I think the chances of some big rocketing explosion in Facebook is probably limited, but trade it as you like. Apple is coming in on a key spot here. We've got, we had a recent head fake that resulted in price coming down to the bottom of the channel. Then we just had a head fake coming out of earnings, where now we're back in the channel. Default position is finding the bottom of the channel. We're right here at the midpoint though, and we are very close to these prior lows. So this could find some support here at that 156.5, 157 area, where you could get a bounce back up. So that would be one to watch here. I think if you get a break back above 159, 159.5, could possibly be a long. I think right here in the middle, kind of a tough place to, jump in like right as the bell rings. But if you got to move down to 156.5 that held, then you might have a good long if you see the market is, showing flashes of strength. Otherwise, I think this comes down to the bottom of the channel. As long as it's within this channel, then, as long as it, even if it doesn't do anything today, if it stalls out, I think that TA 101, once you go out and then come back in to a trading range, which can be a channel as well, your default has to be looking towards the bottom of the channel as support. I just want to show you the important level we're at. We had talked about this last week, that we're at a triple level of support for Apple. We've got the 200 coming in, we've got a big trend line coming in, and we've got lateral support all coming in right here at 157.50. So if they're going to save it, it would be right here. And any kind of breaks below this longer term have bigger implications. Tesla outperformed markedly on Friday, only down 0.77%, while most everything else was down a lot. We're kind of right here in no man's land. I think you got to key off of 860. If we get a move down to 860 and it holds, you could have a long there. If it doesn't, then that would be a pivot point to get short. Remember, looking at the bigger picture, which is important here, we also have the 200 coming in at right here, right below 900. So as long as price is pinned below the pinned below the 200 moving average, I think you got to lean to the downside. And if bulls are able to reclaim the 200, get above 900 and hold it, then that would be a very bullish sign. But to me, this looks like, given the fact that we were at 1075 just a week ago, and then they sold that down, and now we've had 4 or 5 days of consolidation just hanging around this area. That to me looks like a flat bear flag where the bears have not been able to break it, but neither have the bulls been able to get back above the 200 EMA. If I had to take a guess, I would say lower. But the nice thing about it, you don't really have to guess. All you got to do is key off of the 200 EMA and say, as long as it's below, I can lean bearish. And if it gets above, that'll be a big technical check mark for the bulls. And you've got a beautiful built-in pivot point there in the 200. Microsoft was a big winner for those of you that took the trade on Friday before the market started. We had talked about this line here at 290, 291. We said that was a very objective place to short. Why? Because it's worked like in the past. Reject, 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 and yet rejected again. So congratulations to you if you took that trade. You were you got a $10, $12 move off of that with no scary bars, no kickbacks, no nothing. You got short at any point, whether you got it at 290 or you got it at 288, really didn't matter. All that mattered was that you saw the pattern recognition, you had it marked, you had it flagged, and when you saw that price was not going to be able to get over 290, that was your objective entry short. And now, what I want to point out is we're in a $10 gap to the downside where price is open to 270. So, I think I let you know on Friday, I took a little position looking for a gap fill this week. If we were to break back above 280, I'd probably just take it off and realarm that level for down the road. I mean, when you're in a weekly option position, if price is not going in your direction, it's going against you. And time is of the essence. It's all about timing. So what I would do or will do is, have my stop here slightly above 280. If I get stopped out, I'm positive on the position already because I got short at a higher level, anticipating this move into the gap. So if I get stopped out, it's going to be a scratch trade and then just reset around 280, because if there's a subsequent move down, I think that gap is going to fill. So I think that's going to be a good trade. Let's just take a quick look at the larger picture. Yeah, where most of the other market participants have either broke below the February low or are right at it, you can see that Microsoft is still, $10 above those prior lows. I think at a minimum, it just fills this gap and tests it. So that's another thing that leads me to believe that Microsoft will give us a 270 test. Amazon, we all know about the disaster, worst day since 2011. Here I've got the gap. Here I've got the Friday trading range. And so now it sets up as a bracket trade. We have the low and we have the high. We have the after hours low here at 25.21. You could use that as a pivot if you're going to actively trade it. But given the magnitude of that move, on any kind of gap down, your bias should be to the downside, just like on a gap up, your bias would be a breakout to the high side. You need that confirmation, but whether this dribbles lower or however it does it, I expect Amazon to go lower. I don't expect everybody to oh my God, rush back in and try and fill that gap right away. I think that it's going to take some time to heal that that damage that was done. And here we are on the weekly, and you can see in one fell swoop we went down to the 618 retracement area. You can see back in the chart, this is one of the only places between the COVID low and this moonshot where there was a little bit of a hesitation. So there is a band of support between where price is now, say 2450 and 2300, but you lose 2300 and then you're coming way down. You're looking at a round trip back to the COVID breakout at around 2000, where there is a gap to fill. So keep your eyes on that level on the longer term time frame charts. Google, we had this set up as a bracket trade after its disappointing earnings last week. We got the gap fill. Now it has fallen back into the original bracket. So what you can do is just reset the bracket trade. What I'm assuming, once you break out of a trading area, once you go in, the target is the bottom of the box. That would be your 2255 area. And then if you break that, then down it goes. So back in the bracket, I would alarm these levels in your system if you are interested in trading Google at all. Let's look at the daily real quick. Down here at 2300. Certainly the door is open for a move down to 2200. Let's check on the weekly. We are down at this 38% retracement level. We do have a ledge of volume over price support here, right at that 2200 level. And then we've got another one at 2027. And then we've got another one at 1800. So you can see that these volume over price support ledges align up really, really well with the fib retracement levels on the weekly chart. So those are going to be good targets for you if and when price were to break support. Now, we're coming into a level here where you might get a little bit more downside, but it's also looks like a place where it could easily put in a tradable bounce. We've been following Netflix after its bad earnings report. We are back down towards the lows here at 187.50. I would have that level marked on your chart as an objective place to take a long if it looks like the market is stabilizing for a potential move back up in this direction, or if things fall apart, you've got a beautiful level there as an objective short. If you break this level where there was all this support back here, then you're going lower. And I'm not going to go look at the chart right now, but remember on the weekly chart and the monthly chart, really looks like 125 is a distinct possibility in the charts. So keep that in mind. Semis was another one on Friday where we had the levels dead to rights. We talked about the breakdown from 240 and a back test of 240. We said super objective level for a short. And the nice thing about Friday's action was there wasn't any kind of big gap down. It put a little try and got rejected there. And you can see it spent 4 hours at 240. Now all that time wasn't on Friday, but on Thursday it got stonewalled at 240, and then Friday could not make that cannot breach that level to the upside. So you had a very, very objective short there, and again, congratulations if you took that. You got you got $10 with no kickback rally, so that was a huge winning trade for you. Congrats on that. Now today we're back down at the low end of the range. I think you key off of 227.50. If you look at the daily chart, which we've been talking about, we've got a little gap there down to 227.50. I think you could see that fill, but then we've got a target down at 223 and even down to 215 on the measured move out of this A, B, C type move. So don't know if we're going to get there on this cycle or not. We're just going to have to wait and see. But definitely, if you're an active type trader today, your objective levels are 227.50. If there is a rally today and you get a break above 232.5, recapturing well-defined levels from below is bullish and can be bought with a stop just below. So if we get a kickback rally today, I'd be a buyer on a breakout above 232.50, or if we came down to 227.5 where that level held. Those are your two objective trading levels right here at 230. I don't think you have really much of an edge. So let's wrap it up here. Let's do a little recap real quick. Going to be watching those oscillators really, really close. I was expecting a more volatile session last night. Maybe the fact that most of the Asian markets were closed muted that. I was expecting follow-up selling today. We'll see if we get that. But then after today and into tomorrow, it gets a little bit more dicey because you got the Fed. Do they front run the Fed to the downside, or do they kind of put the brakes on all of that with a wait and see towards, what is Jay Powell going to say? Is he going to back off on quantitative tightening? Everybody's got 50 basis point rate hike already penciled in the books. Does he put a dovish spin on it, or is he coming out guns a-blazing, hawkish as ever, and giving the markets no thread of life to grab onto as far as the outlook going into the summer? So stay on your toes. Don't get married to a narrative. Watch your levels like a hawk. Don't get married to any position. We're in transition now, and whenever you're in a transition type situation, there's going to be a lot of turbulence. So have a good day of trading. Hope you got benefit out of the video. If you're new here, please hit the alarm bell and the subscribe button. Jump over in the show notes, drop in your email. We'd love to have you be part of the team and join us. You'll also get an invite to our trading room. It would be great to have you. So until we speak again, this is Chris Buss with Traders Profit Compass. Have a good day of trading.